Kroger stock is currently trading at $53 per share. In the past year, they are up nearly 43%, and year to date, they are up 18.15%, which is phenomenal when you consider the broader market has returned about negative 16% in that same amount of time. So in this video, we're going to be jumping into my stock valuation spreadsheet to find the intrinsic value of Kroger and see if it's a stock we should be buying or selling. And on this spreadsheet, we have 4 valuation models. We have Graham's valuation, a discounted cash flow model, a multiples valuation, and a dividend discount model, which will all roll into our output tab. So let's go ahead and jump over to our stock screener. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So let's go ahead and come here and plug in Kroger stock ticker and hit enter, and we can see all of this data is going to load in, and we're currently looking at a 250-day change. But if we come over here, we can change that to a 1,000-day change. We can see they have had a phenomenal run over the past few years if we look at the price appreciation they've received here. If we come over here and look at the dividend data, we can see they're paying out 84 cents per share currently, which gives them a dividend yield of 1.57%, which is kind of low. But if we actually look at the dividend growth of this company, we can see they've been increasing the amount they pay in dividend for the last 15 years, which is a great sign for dividend growth investors. We can see their payout ratio is currently sitting at 35%, meaning they have a very safe dividend growth. So if we look at these moving averages, we can see it has declined a little bit with a 20-day moving average and 50-day moving average along with the market, but the 200-day moving average is still up. Our 1-year return on this company is 42%, and the 2-year return is 64%. Now, analysts do currently have a price target of $55 per share on this company, which is not much higher than the current price, but the institutional ownership is much higher than usual, which is a pretty good sign of investor confidence. Now let's go ahead and jump over to Graham's valuation. And Graham's valuation is a valuation model invented by Benjamin Graham, who is one of Warren Buffett's mentors, and we can see the formula he laid out for us right here for this valuation model. The first thing we need is our earnings per share, which for Kroger is currently sitting at 2.17. We're then going to multiply that by 7, which is the price to earnings of a company with no growth. And then we're going to add a growth rate projection of 7, which is what analysts are projecting. We're then going to multiply that by 4.4, which is the average yield of a AAA corporate bond. Once we have that number, we're going to divide all of this by Y, which is the current yield on AAA corporate bonds, which is much higher than it has been over the past few years, currently sitting at 4 at the time of this video. And this gives this company an intrinsic value of $33 per share, which is much lower than the current price. But let's go ahead and look at our other valuation models. The next valuation model is going to be a discounted cash flow analysis. And in order to perform a discounted cash flow analysis, we need to project a growth rate for the future free cash flows of this company. You can see in order to do that, I have looked at the historical free cash flow for this company, and we found that they had an average growth rate of 30%, which is massive. Obviously a great growth rate during the bull run over the past few years. This is not likely to be sustainable when you look at what the industry's expectations are. I'm projecting a growth rate of about 6.5%. And something that is positive about this is we can see they're using automation and artificial intelligence, which the company views will be a competitive advantage over the next few years. I tend to agree, but I think that's also going to keep them competitive with bigger companies like Amazon. So I'm using a growth rate of 6.5%, which is a fairly modest growth rate. We can see with that growth rate, we can project the future free cash flows of this company and the terminal value, which is the sum of all the future free cash flows past the year 2030. I then take the present value of all these future free cash flows and add them together, which you can see right here. I add the company's cash and cash equivalents and subtract out their total debt, which gives me their equity value, which you can see right here. After I have this number, I divide by the number of shares outstanding, which gives me a discounted cash flow price per share of $57.93. Now let's go ahead and look at our multiples valuation. And essentially the idea behind our multiples valuation is we should be able to value this company based on how the market is valuing companies that are similar in structure to Kroger. So you can see we're looking at companies like Target and Walmart, and what we're doing is we're looking at their price to earnings multiple. So we're taking their stock price and dividing it by their earnings per share, which gives us their price to earnings multiple, which we can see for Target is about 15 and for Walmart is 30. We then take the average price to earnings multiple and multiply it by Kroger's earnings per share, which gives us an intrinsic value using the multiples valuation of $49.89. Now let's go ahead and look at our dividend discount model. And the dividend discount model gives us a valuation based on how much a company pays out in dividends and how much that dividend is increasing. Now, we did just see that they have been paying or increasing the amount they pay in dividends over the last 15 years, which is a great sign, but we're gonna see if that's sustainable and if they're gonna keep increasing the amount they pay in dividends. So what I've done is I've plugged in their quarterly dividend payouts over the past 5 years, which then allows me to see how much they pay out yearly. I then can see the yearly dividend growth rate based off of those numbers. We can see they've had an average growth rate of 13.86%, which is really phenomenal dividend growth. It likely won't be that high for the next few years. They might have a few years where it's relatively high, but it won't be sustainable at that level. So I'm projecting a growth rate of about 7.5% and a discount rate of about 9%. So when we plug those in, we can see we get a dividend discount model price per share of $60.20. Now let's go ahead and jump over to our output tab. And here on our output tab, we can see all 4 of our valuation models put together. Graham's valuation at 33, multiples valuation at 49, discounted cash flow at 57, and our dividend discount model at $60.20. So we can see Graham's valuation is actually pretty far off from these other valuation models. One of the big reasons for this is the current yield of AAA bonds has gone so much higher. Less than a year ago, was sitting more at about 2.8. So if we plug in 2.8 here, you can see the intrinsic value starts to reflect the intrinsic value of these other companies. But with a recent market downturn, the current yield of AAA corporate bonds has increased quite a bit. So it's still worth keeping this valuation model in our analysis. But when we average all 4 of these valuations together, we can see we get an intrinsic value of $50.36. And the current price of this company is $53.39. So according to this valuation model, this company might be slightly overvalued. So obviously when we apply a margin of safety of 20%, we can see our acceptable buy price for this company is $40.29. So our valuation spreadsheet is telling us this is not a company we should be buying. Now, I think Kroger's business model and future projections overall is pretty strong, but I think with this current market, we are going to be able to find some better opportunities. Now, keep in mind, it can take a while for a company to reflect its true intrinsic value. So whether a stock is above or below its intrinsic value, it's going to take time to reflect that number. But go ahead and let me know what your thoughts on Kroger stock are in the comments below. Let me know whether you own any, whether you agree or disagree. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. There you can also join my Discord, where you can be a part of a group of like-minded dividend growth investors. So be sure to go ahead and leave a like and subscribe to the channel. So with that being said, I'll see you guys next time.